Welcome to today's discussion. We're diving into the world of closed-end funds, specifically exploring the often misunderstood concept of leverage. It's a powerful tool, but one that requires careful understanding.
Precisely. Leverage can significantly amplify returns, but it's a double-edged sword. Understanding its mechanics and inherent risks is crucial for any investor.
Many investors are hesitant about leverage. What makes closed-end funds particularly well-suited for this strategy?
Their unique structure. Unlike open-ended funds, CEFs issue a fixed number of shares in an IPO. This stable asset base makes managing leverage ratios much easier and more predictable.
So the fixed share structure is key, but why do CEFs employ leverage in the first place? What's the goal?
Primarily to enhance returns and income. Leverage magnifies portfolio performance, both gains and losses. A positive return on the underlying portfolio translates to amplified gains for a leveraged fund.
And conversely, losses are magnified as well. It's a high-risk, high-reward proposition. Can you give us a hypothetical example to illustrate this magnification effect?
Certainly. Imagine a portfolio with a 10% return. A fund with 20% leverage would see a roughly 20% return, 10% plus 10% leverage effect. But if that same portfolio loses 10%, the leveraged fund would experience a roughly 20% loss.
That clearly shows the potential for both significant gains and losses. Let's move on to how CES actually implement leverage. What are the common methods?
There are several ways. One is borrowing at short-term rates and reinvesting the proceeds. Another involves issuing senior securities, like preferred shares, which pay dividends. Finally, there's portfolio leverage using inherently leveraged investments.
So borrowing, issuing preferred shares, and investing in leveraged securities. Each method has its own costs and benefits, right?
Absolutely. Borrowing incurs interest expense, while preferred shares involve dividend payments. Portfolio leverage can sometimes be more efficient, but it still carries inherent risks. The success of any leverage strategy hinges on whether the increased returns outweigh these costs.
And what about the impact on volatility? Does leverage affect the fund's net asset value?
Yes, significantly. Leverage increases the volatility of the fund's NAV and potentially its market price and distributions. This increased volatility is a key risk factor to consider.
Let's talk about Nuveen's approach to leverage management. How do they mitigate these risks?
Nuveen employs a multifaceted approach. They focus on asset classes and strategies that they believe will benefit most from leverage. They also set strict internal guidelines, monitored daily, to ensure they stay within regulatory limits.
Daily monitoring is crucial. What other risk mitigation strategies do they use?
They utilize swaps and hedges to manage costs and volatility. They also actively seek to expand their network of partners to secure more favorable leverage terms.
So it's a proactive and multi-pronged approach. Let's delve into the different types of leverage Nuveen uses.
Nuveen utilizes regulatory leverage through preferred shares and debt, both senior to common shares. Debt can be obtained through banks or public/private markets. Preferred shares often have fixed or floating dividend rates.
And what about portfolio leverage?
That involves investments like inverse floating rate securities and certain derivatives. These investments provide leveraged exposure without direct borrowing.
Each type has its own characteristics, making them suitable for different market conditions and fund strategies. What are some key takeaways for investors considering CEFs with leverage?
First, understand that CEFs are well suited for leverage due to their structure. Second, leverage amplifies both gains and losses. Third, various leverage types exist, each with its own costs and risks. Finally, a long-term perspective is crucial for realizing the potential benefits.
Excellent points. Let's briefly discuss the importance of a long-term perspective when considering leveraged CEFs.
Short-term market fluctuations can significantly impact leveraged funds. A long-term view allows investors to ride out these fluctuations and potentially benefit from the compounding effect of leverage over time. It's not a strategy for short-term traders.
That's a critical point. Investors need to be comfortable with the increased volatility inherent in leveraged investments. Let's shift to Nuveen's overall investment philosophy. What makes them a strong choice for investors?
Nuveen has a long history in closed-end funds, offering dedicated client service and a commitment to long-term value creation. They combine market leadership with focused expertise and a deep commitment to their investors.
Their experience and commitment are certainly reassuring. Let's briefly touch upon the information provided on specific Nuveen closed-end funds.
The provided data showcases examples of Nuveen's closed-end funds, highlighting their distribution rates and premium/discount to NAV. It's important to remember that past performance is not indicative of future results.
Absolutely. Investors should always conduct thorough due diligence before investing in any fund. Let's discuss some related articles that provide further insights.
The mentioned articles cover various aspects of closed-end funds, municipal bonds, and fixed income, providing a broader context for understanding leverage within the investment landscape.
These resources offer valuable supplementary information. Now, let's address some important risk considerations.
Investing in leveraged CEX carries inherent risks, including the potential loss of principal. Tax implications also need careful consideration. It's crucial to consult with a financial advisor before making any investment decisions.
Absolutely. Investors should always seek professional advice tailored to their individual circumstances. Let's conclude our discussion. To summarize, leverage in closed-end funds can be a powerful tool for enhancing returns, but it's crucial to understand its mechanics, risks, and the importance of a long-term perspective.
Indeed. Careful consideration of the various leverage strategies, risk mitigation techniques, and a thorough understanding of the fund's investment objectives are paramount.
That was a great discussion. Thank you for sharing your expertise.